This is the Scrap Metal Commodities Recycling Report by Benlee and Raleigh Goldsboro Recycling, February 6, 2017. Due to scheduling issues, this is a special remote report. Last week, commodity prices were steady to down, while there were a number of positive economic reports. Looking at the left of this chart, U.S. steel production hit new 7-month highs, driven by good automotive production and strong construction. Oil rose $1 to $54 a barrel, remaining at double the price of a year ago. This continues to have a positive effect on jobs and is helping stabilize commodity prices. Higher oil prices are leading to the oil rig count continuing to rise. The current 583 rigs is now a huge 84% over the 316 low of about a year ago. Importantly, though, the oil rig count is still only a third, yes, 1/3 of what it was about 2 years ago. Iron ore ended flat at $83.50 a metric ton. Like oil, it is more than double the $37 that it fell to about 14 months ago. On the left, we see scrap ferrous prices remain steady, but part of the U.S. started selling material down $10 to $25 gross ton last week. Good demand seems to be offsetting the strong push down that some predicted. More than $25 down could still be possible in some areas. Hot-dip galvanized steel held at $858 a metric ton based on good demand, continued higher scrap and iron ore prices. This month's lowest scrap prices should support price stabilization, though. Stainless 304 scrap yet again held steady at 36 cents, showing many weeks of stability. Copper fell 8 cents to a bit over $2.61 a pound, but is up to $2.63 this morning. Spreads are higher as transaction prices remain good, but not as strong as the index. Note that copper prices remain near 18-month highs when looking at this 5-year chart. Copper inventories have been falling in recent weeks, which should help stabilize prices despite the major run-up. Aluminum was flat for the week at 83 cents a pound on no major news other than good overall economics. Aluminum, like copper, remains close to 18-month highs when looking at its 5-year chart. Aluminum inventories have stayed in a small band for a couple of months, which are near 9-year lows, which is supporting stable to higher prices. China, which produces more than half the world's steel and consumes half the world's copper, continues its slow manufacturing growth for the past 6 months with their PMI, Purchasing Managers Index, at 51.3 in January. Over 50 is expansion, so this is the 6th straight month of over 50, driven by higher exports and better business expectations. The U.S. manufacturing PMI was 55 in January, the highest reading in about a year, which is great economic news driven by robust output and new order growth. The U.S. unemployment rate rose a bit last month to 4.8%, but as we have seen, that is far from the full story. Total U.S. employment hit a new all-time high as 227,000 jobs were created in January. Ever since stimulus programs were put in place in 2009, there has been steady U.S. job creation. 9.4% unemployment might be a better number to use. This includes part-time workers that want full-time jobs and discouraged workers. This was over 17% in 2009, so at 9.4%, it is much better today. U.S. vehicle sales hit another all-time record in 2016 after a record 2015, but they fell a bit to an annualized rate of 17.6 million in January. On the positive side, a higher percentage of vehicles are larger, more profitable crossovers and trucks versus less profitable cars. Ford's F-150 all-aluminum truck body remains the #1 selling car or truck in America. With that, we hope all have a safe and profitable week.